Hello, let me introduce myself. Amelia Putri, Class MNJ23C. NPM 234111027. The development and types of banks are two interrelated topics. Because the development of the banking industry affects the form and function of the various types of banks that exist today. Here is a more detailed explanation. Bank development. The development of banks can be seen from the evolution of financial institutions that initially only functioned as a place to store money, then developed into institutions that provide various other financial services. Here are some stages of bank development. 1. Early period, traditional banks. Initially, banks only functioned as a place to store money and provide money exchange services. These banks were generally owned by individuals or wealthy families. During this period, banks also acted as institutions that provided loans to traders or entrepreneurs. 2. Central banks and modern banking. 18th and 19th centuries. Over time, central banks emerged that played an important role in regulating the country's monetary and economic policies, such as the Bank of England, which was founded in 1694. In the 19th century, banks began to develop into more complex institutions, offering various products such as credit and deposits, as well as an important role in the national economy. 3. National and international banking era. 20th century. In the 20th century, the emergence of economic globalization and integration of world markets led to the development of banks becoming more modern. Banks began to introduce various financial products, such as credit cards, international transfers, and other investment instruments. Banks also began to utilize technology in their operations, such as the use of computers and the internet to facilitate transactions. 4. Digital banks and financial technology. 2000s and present. In the last few decades, technology has changed the way banks operate. The emergence of digital banks and technology-based financial services, fintech, allows banking services to be faster, more efficient, and more easily accessible to the public. Many banks now provide online services, mobile banking applications, and even open services without physical branches, digital-only banks. Types of banks based on their functions, types, and roles. Banks can be divided into several main categories. 1. Central banca. Central bank is an institution that has the authority to regulate monetary policy and maintain the stability of the country's economy. The central bank does not serve the public directly, but regulates banking in general and issues state money. Examples of central banks in the world are Bank Indonesia, BI, Indonesia's central bank. Federal Reserve, the central bank of the United States. European Central Bank, ECB, the central bank of the Eurozone countries. 2. The main functions of a central bank include regulating the amount of money in circulation, setting interest rates, supervising commercial banks, maintaining the stability of the financial system. 3. Commercial banks. Commercial banks are banks that provide banking services to the wider community, both individuals and companies. This bank provides services such as savings, checking accounts, credit, loans, money transfers, and other services. Commercial banks are divided into private banks, banks owned by private parties, both individuals and companies. Examples: Bank Central Asia, BCA, Bank Negara Indonesia, BNI. Government bank, a bank owned by the state and usually plays a role in supporting the country's economy. Examples: Bank Mandiri, Bank Rakyat Indonesia, BRI. 4. Rural credit bank, BPR, rural credit bank is a bank that focuses on providing credit to small communities, especially in areas that are underserved by large banks. BPR usually provides savings and loan services in small amounts. This bank is often used by rural communities or micro and small businesses, MSMEs. 5. Sharia Bank. Sharia banks operate on principles that comply with Islamic law, where transactions do not involve interest, riba, and encourage fair transactions. Sharia banks offer products such as mudharaba, murabaha, and ijara financing. In Indonesia, large Sharia banks include Bank Syariah Indonesia, BSI, and Bank Muamalat. 6. Digital Banca. Digital bank is a bank that operates entirely online without having physical branches. All banking services are carried out through digital applications or platforms. Digital banks are increasingly popular because they offer easy access, low operating costs, and faster transactions. Examples of digital banks in Indonesia include Bank Yago and Bank Neo Commerce. 7. Investment Bank. Investment banks focus on providing more complex financial services, such as raising funds through capital markets, corporate financial advisory, and other large financial transactions, such as mergers and acquisitions. Investment banks deal more with large companies and financial institutions. 8. Savings Bank. Savings banks focus on collecting funds in the form of savings from individuals or the community to then be distributed back in the form of loans to those in need. This service is more focused on individual customers who want to save and earn interest on their savings. Conclusion: the development of banks shows how important the banking sector is in the global economy. From traditional banks to digital banks, each type of bank has different goals and services, but all play an important role in providing financial access and supporting economic growth. With technology, the form and services of banks continue to develop, providing convenience and comfort for consumers and the business world.